Hello everybody, it's Clayton again, and as you probably saw by the thumbnail in this video, I want to focus specifically on AT&T and why I think it's a great stock to pick up. Before I dive into that, I want to show you a few things. So in a little 4 or 5 minute video I made for as an intro to the channel that kind of will be on my YouTube page, I mentioned that my dividends have gone up to $5.88. What it looked like was literally an hour after I published episode 5 when I talked about my first dividend payments. I had jumped the gun just a little bit because I got the rest of the monthly payouts of $5.88. So as I was stating for when it was just under $1, how excited I was. Now to see it at $5.88, it makes me even more ecstatic. And I cannot be any more happy with the growth that's coming through this portfolio. It's just starting, I know that, but it's going to be something that I continue to look forward to and promote. And recently I've been talking to a few people about stocks that they hold in their portfolio that they really enjoy or stocks that they recommend, just because I like to kind of talk to friends and family and just get their opinions on things. And there's a few that I've heard. Microsoft and Visa are two specifically that I've heard a lot about. And I looked into both, and I want to pull them both up and tell you what I think about them. So the stocks themselves, if you look at their dividend history, I'm just going to focus on Microsoft right now. Their dividend history has been a consistent growth since 2004. Every year it seems to go up, and it's fantastic. The problem with me with this stock that kind of scares me away, or not scares me away, pushes me away from wanting them, is it's only a 1.1% yield right now. So for me to get a total of $2.04 of an annual payout, I have to put $188 towards Microsoft. And yes, it is a very reliable stock, and I think it's just going to continue to grow as time goes on. But for me as a dividend investor, that low of a yield does not interest me at all. If the value were to come down, I would probably make it would have to come down a lot personally for me to want to pick up Microsoft. If anyone likes Microsoft and wants something that's a safe bet, Microsoft definitely is one of those companies. But the dividend payout to me is just too low, and you can get that same return in a high yielding savings account. So that's why I don't see the reason to get something like Microsoft, or let's even go to Visa, which I'm pretty sure the yield was even lower. Yeah, the yield is 0.59. It's a good dividend stock. You can check its history. But do I really want to have to spend $205 to get, I think it was a return of, let me pull it right back up. You see it grows every year. To get a return of $1.20. I can put it in a savings account like Ally and make that back almost 3 times, because right now I think Ally's sitting at a 1.6% yield or interest rate. So that's why I don't like these kind of stocks. I have nothing against them, especially if you purchase them early. But to me, it's just something that I wouldn't invest in now. The yield is way too low and the payout, obviously, with the yield, it just doesn't fit me. With that being said, that is why I truly and really like AT&T. So let me pull up AT&T. You can see their dividend history has continuously gone up. There was a little hiccup here, but for the year, it still was up, and it's continued to increase every year. And, excuse me. Their scorecard right now, they're paying at a 5.41 dividend yield. $2 is their annual payout. But that 5.4 is what obviously grabs my attention. That mixed with the consistent history of the company and the low stock price of $38, to me, is something that I really, really want to get involved in. And I'm going to be in this video, I'm going to be putting AT&T in my portfolio, and I'll show you how. I haven't really shown people exactly how to do that. If you're new to M1 Finance, I'll show you how to add stuff to your portfolio. But to me, AT&T's got a lot of room for growth. They made a lot of mistakes in the last, I would say, 10, 15 years. They bought DirecTV, I think it was in 2016, when essentially everyone was starting to cut the cord, and they wasted money drastically on that. Then they purchased Time Warner, I think it was last year or the year before that, spent $109 billion on that service. And that's kind of a weird thing to go with AT&T, because AT&T is focused more on telecommunications. And again, it seemed to be like they didn't know what they were doing and they had no guidance. But over the last 6 months, there's a company by the name, or a shareholder company by the name of Elliot Management, that bought $3.2 billion worth of stock into AT&T. And they wrote a very long, very scathing letter that was about 23 pages, and you can read through it if you'd like. I can post the link below if anyone would be interested. And they essentially told AT&T what they need to do to fix their problems they're facing. And one you can read right here is they stated, what has attracted our attention, as well as the attention of other shareholders from large institutions to individual AT&T employee, has been the prolonged its substantial underperformance of AT&T as an investment relative to its potential. That's what I was just saying. They've been basically floundering and squandering everything for 15 years. Elliot wrote in his letter to AT&T Monday, over the past 10 years, for example, AT&T, a bellwether in all sense of the words, has not only failed to keep pace with the broader market, but has actually underperformed by over 150 percentage points. They then go into some things they recommend, and one thing they really recommended that has seemed to touch a chord, because AT&T has since responded and started to do this. So it looks like this $3.2 billion stake, they're actually taking the shareholders' company, they're taking their words to heart because they see that other investors are agreeing. And one thing they said is the shareholders suggest that AT&T move into what is believed a non-core market, which is DirecTV and Warner Media among them. It has not only contributed directly to its profound share price underperformance, but also caused distractions that have contributed to the company's recent operation underperformance. Meaning they're putting too much time into things that don't match their core values and what the AT&T is about, which has caused them to be so stagnant. So Elliott said it takes issue with the exodus of the members of the management team that ran both DirecTV and Time Warner, and urged AT&T to focus on more internally on its core telecommunications business and broaden its leadership team with potentially adding new members to its board of directors. After this, they had actually the CEO step down. So things have changed. But with AT&T, one thing they didn't focus on is, and they are working towards it if you read about it, and same with Verizon, is 5G is just around the corner. And AT&T and Verizon are both working to become, I don't know, I wouldn't say the first to put it out, but become stable with their 5G. And once that comes out, AT&T stock, in my opinion, and through most of the people I have read and seen, think that it's going to get a bump up when this becomes reality. So that's one thing now that I want to get ahead of. And the other thing that I really want to get, that I really became interested in, is obviously you've seen Disney Plus has come out and all these other streaming services are coming out. And in I think it's May 2020, HBO, which is a part of Time Warner, is releasing HBO Max. And let me quickly just show you a trailer for their HBO.
Hey, what's all the excitement about?
Are you ready to see something different?
This is the moment I've been searching for.
Ready?
Ready.
Take the red pill, and I show you how deep the rabbit hole goes.
I'm Batman.
He's looking at you, kid. We're the ones to revolutionize. Hello.
He's like the whole package.
Everybody watch me go.
These children are the future of humanity.
Bazinga.
I'll get you, my pretty.
Things are looking up.
All right, boys, let's go launch this rocket.
Now, with HBO Max, that's going to be something that I think will help, again, with their stocks. Now, I'm not saying they're going to dominate the market when it comes to the streaming service. Not at all. But you saw just from that preview, they are going to have a very, very large library to deal with. Be it Game of Thrones, even though a lot of people don't like how that show ended, or a lot of movies, a lot of classic movies. You saw Rick and Morty on there. You saw a lot of talk shows on there. There's a lot of stuff that they're going to be able to offer. But that's not the only thing that really piques my interest with this. The other thing that really piques my interest, and I want to show you, is if you look at what Warner came out with. This was, I think it was a few weeks ago. I had the date of the article. Let me pull up exactly when it was. It was last year. I apologize. March of last year. Warner wants to focus specifically, like Netflix, they want to start to churn out more original content. And what they want to do is they want to make it where the content isn't necessarily an hour-long movie or video or segment. They want to try to push out, as you can see, AT&T might start to push create shorter bite-sized content intended for some mobile devices. The purpose of this is because of how basically our world is changing and everybody views things in such small and short clips. I know it's weird to say that as you're watching a YouTube video of mine. That'll probably be anywhere from the 15-20 minute range. I don't know where it's going to finish off. I'm really interested in this AT&T stock, so I may ramble more than I usually do. But they want to try to shorten their content to get to a audience or to stay more relevant to more people. So to me, with the potential of 5G that's right around the corner, with the coming out of HBO Max, and with their or HBO Now, and their focus on shorter content, plus the changes that are happening in the infrastructure of the company, which Elliot Management had posted about, I really, really think that AT&T is a stock that I am going to buy and hold for a long time. They've shown with their dividend history, as I showed before, they've paid out for 35 years now. You don't find a lot like that. And to me, I don't think you can find a safer stock, especially at this value. And that's really why I want to invest in them. Now, like I said earlier, I'm going to show you how to invest. Yes, I'm still here. But to do it, all you need to really do is, let's say I want to add some more portfolio. So obviously we've talked about it before. I've got my pies. Now, where this is going to fall is, to me, I'm going to actually make a new pie for this because I think that it fits better in its own pie. I think that, let me add one really fast. Let's see, AT&T. Okay, so yeah, I'm going to make my own just for communication is how I'm going to do it. So let's go back and go to Expert Pies. Actually, I got to go back a little bit more. Sorry, I have to get out of looking for stocks. Go back. Okay, so let's go to Research, My Pies, and let's create a pie. So in that pie, we're going to create AT&T. Put that in my pie, add to basket, add new pie portfolio, edit that. Let's just name it Telecommunications. I don't know why my caps lock keep getting stuck. And we'll put it 100%. Let's add that. Oh, sorry, click save. That's my mistake. I do that every time. Save. And we can go back just to make sure we did it correctly. Let's go back to research, go back to my pies. There should be now in a unused pie. Yep. Click add to portfolio. And now we'll determine what percentage. So obviously right now, I'm quite pleased with how everything has been going, but what I'm going to lower is I'm going to lower my commercial a little bit. Let's bring down real estate to 20. I want to keep bonds at 20%. And I've been asked before why, because obviously bonds to me are just a safe bet in case something does happen with the economy. It's more just me covering my basis in case something happens for the short term. But let's lower technology just a little. Finance will bring down to 7. I think 10% may be a little bit too high for AT&T. So let's put them at 9. Put finance at 8. Yeah, I think that's how I want to do that. I may make some edits after the video, but I think that's good. Yes, confirm. And then on my next time that funds are put into the account, you will see that there will be a purchase of AT&T. And also, one other thing I did change is I had currently set at, so you can see the dividend payouts actually are starting to pour into my actual account now. I changed it where I was depositing $250 a month. And what I wanted to do, especially with this market that's all over the place and it's up and down every day, and I wanted to kind of continually invest in this market, I've changed it to $125 every 2 weeks to be more active with my account and to increase the value a little bit faster. That's just something I'm more comfortable with. I know some people would rather do monthly, and I don't fault those people at all. For me, I just want to do the every other week aspect of it as I'm adding and changing stocks and growing my portfolio. Because ideally, I want to finish anywhere between 15 to 20 stocks. I know some people think that's too much. For me, that's where I feel comfortable. I think it's the most diversified for me. It allows me to cover my grounds when other industries are doing poorly. And yeah, that's where I'm at now. Like I said, we were at the 5% or $5 dividend gain, and I couldn't be more happy. I truly am happy. I appreciate all of the support that I've gotten thus far. I've gotten a lot of kind words, and the subscriber count is, I know it's at, I think it's roughly around 28 right now, and some people are like, oh, it's 28 subscribers, who cares? That's more than I thought I'd have in a long time, or if at all. I'm literally sitting here talking to a computer screen. I'm doing nothing besides giving an opinion based on what I see and what I've researched, and 28 people care to follow or listen to what I have to say. So I truly do appreciate that. Anybody that's watching this that isn't a subscriber, I appreciate you guys as well. If you'd like, please feel free to subscribe. If you want to press that thumbs up, it definitely helps reach more people. It helps that YouTube algorithm. Please also know I am not a financial advisor, and I've said this in every video, and it's also probably in the beginning of this video because I tend to put it as a kind of disclaimer. I'm not a financial advisor. You can definitely take what I'm providing and look into it and see if you agree with it, but please do not take what I say as gospel. Do your own research, and if you have any questions about dividends, I've been helping a few people on the Facebook forums. I've asked simply what are dividends? Why would I invest in dividends? I've answered some questions. I can definitely do that on here if it's something that interests people. Leave some comments to say if that's something you'd like to see me answer questions on the channel. Or if you just have a question, leave a comment. I'll gladly answer it in the comment section if you don't want to be in the video itself. But again, thank you again for watching. I really appreciate everyone's support, and I look forward to seeing you in the next video.